You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you are just gorging yourselves these days. We don't judge. Gorge away. Have at it. Of course, you can join us on demand on just about every platform under the sun. If you like what you hear on those platforms, do keep rating and reviewing. It does help the legion of new folks. We've been around for a while. This January, 15 years. So we got quite the cadre of listeners, but there are new people discovering these markets all the time. It's crazy. So keep rating and reviewing. It really does help new people discover the content. And of course, if you want to up your game, join us live for this show, everything else we do throughout the week, the pro Q&As. We had a great one with Jem Carson from Kai Volatility Advisors this week. A lot of great questions in there about skew and vol and all the things we talk about on the show to a great degree. So check that one out if you haven't done so already. Of course, you know where to go to learn more. TheOptionInsider.com/secret club. People joining from all across the globe these days. Just this week, new people from Lithuania and Vietnam. It's always fun to see the broad reach of the secret club. So check it out, TheOptionInsider.com/secret club to learn more. And of course, however you listen live after the fact, keep sending in those questions, those comments. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from on the program today. First off, to the Southern Volatility Mecca we go, aka Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the world of volatility once again, sir. How go things?
Things are great. It's good to be here. We're watching the market make a decision, I think, as we're recording this.
Yeah, it does seem like the worm is turning a wee bit. We shall get to that. This show known for turning vol and turning markets, listeners. Go back and listen into the archives. We've had some epic vol turnarounds and market turnarounds right in the middle of the show. So not exactly unfamiliar with this turnaround thing. And joining us this week in the MIAX hot seat, our old friend, Mr. Brian Overby the irregular host of Options Playbook Radio, aka OPR. And of course, when he's not busy doing that, he's moonlighting over there as the senior options analyst over there at Ally Invest. Mr. Overby, welcome back to Volatility Views, sir, for the first time in 2022.
Well, yes, it's great to be back. And we'll see if I can peg the volatility indexes at the end of the show once again. If you recall, that did happen the last time around.
Yeah, you were pretty good last time. We'll see. Can you go 2 for 2? We shall find out as we head right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, buddy, welcome to the Vol Review. Good thing to see our show just starting, our chat getting in their best Ric Flair impersonations. It's not even the Monday Option Block show. The wrestling just permeates there. Good stuff over there in the secret club. But of course, interesting stuff on the market side as well. As the Meatball was alluding to, we were seeing earlier in the session today a bit of a mixed bag. The Dow was kind of dragging everything else down. They had a mixed deal in the S&P. NASDAQ was up firmly most of the day. Now, as we're kicking off the show here, we are seeing, again, everything pretty much ticking into the green. As we kicked off the show, the Dow was up about 0.2%. S&P was up 0.75%, and the NASDAQ up over 1.5%, about 1 2/3% out there. So a lot of green on the old screen after a mixed night. And of course, yesterday, coming after on the heels of the rout of yesterday, as everyone has seen, Facebook/Meta got annihilated, one of the worst losses of any market, I think, of any name in terms of market cap in a single day. So setting a dubious record, Zuckerberg losing somewhere $25-30 billion of personal net worth. So not a good day. That dragged a lot of names down. But the funny thing is, people came for other names like Snap and everything else that preemptively, and then of course Snap ends up blowing the doors off and they get the nice turnaround. So all kinds of fun stuff. We'll get to that a little bit later in all the earnings fun. But as we kick off the show here, earlier in the session, we were kind of still lurking adjacent to Loggins territory. That's usually north of the 25 in spikes and VIX. But as this turnaround has cemented, we have seen vol come off. When we kicked off the show, spikes was down to almost a 24, about 24.25. That puts it down about 6 points from where it was this time last week. VIX cash, a little bit shy of the 24 handle, about a 23.80 or so when we kicked off the show. That was down about 6.5 points from this time last show. And of course, our old friend, the VVIX, the vol down about 10 points to about 125. And our old friend, the Viking, also coming in quite a bit as well. It was a 180 on our last show, 160 on this show. A lot of people have still asked where they can get the Vikings, aka V-Spikes. The symbol is V-Spike, VSPKE. Some platforms still are not propagating it, so the easiest place to find it is to go to Simon's site, the creator of Spikes and, of course, V-Spikes. It's just T3index.com. They have a bunch of indices they disseminate there. Click on the Spikes there, and you'll see all the associated indices with Spikes, and one of them is V-Spikes. You can find it there if you are looking for it. So a lot to unpack. But, Brian, as I mentioned at the top of the show, this is your first time joining us in the mad new year that is 2022. A lot happening already just in the beginning of this new year. So let's kick things off there. Walk us through the last couple of weeks for you. In particular, a few weeks ago, we come in, NASDAQ's off, 4.25%, then reverses it all and goes positive on the day. We see a similar move the next day. A couple of sessions later, it rallies hard and then gets his wings clipped. So a crazy week full of vol and reversals. And then, of course, this week, no slouch as well. So walk us through what the last few weeks have been like for you and the folks over there at Ally, sir, in this mad period of volatility.
Well, definitely. The concept of expected move is basically blown out of the water. Never seen so many lines in the sand just get annihilated on the upside and on the downside. This is one thing to let you know that when they say we have high volatility, it does not have any regard to direction. So I've just never seen this if you think about this just overall, if you were betting on a football weekend, this would be just one of the craziest. Teams were getting blown out by 50 points and then basically having a tie 0-0 overall, because just the volatility of the actual stocks that have been trading. If we go back and we look last week, we saw just Google overall, which announced on Tuesday, expected move around 4%, and it trades as much as up 13%. We have Amazon today that's doing the exact same thing. Amazon expected move was right around 4%, and right now it is up 14% on the day. But I do think the most interesting thing today to talk about, and it's actually kind of hidden by all of these massive moves, is interest rates are up. We see the 10-year trading at 1.9%, kind of quietly drifting higher overall. And to see the VIX trading right around the 23 handle with interest rates climbing is kind of surprising to me. And I think maybe it's just that people are just not seeing that overall. So a lot of volatility, a lot of volume from our clients in all of the FAANG stocks overall, and good and bad, right? We have Facebook offset by what happened in Google and Amazon. So portfolios that are struggling, but then it's kind of almost like this week would be a great week to just take a hiatus and go on vacation and come back and just see where your portfolio is at overall. Vol has been crazy. I guess that's the moral to the story.
This is one of those weeks where you like to advocate lie down until the urge goes away, sir?
Yeah, that is definitely, and that is my line. This good week to lie down until the urge goes away, take a vacation, relax a little bit, come back next week, and hopefully all of the fog gets lifted and you can see the marketplace a little more clearly.
I know that catchphrase is starting to resonate, sir, when some of our listeners are repeating it back to me now in like emails and chats and stuff. So it's starting to get out there, Brian. You're infecting the listeners for better and or for worse out there. All right, let's go on out to the land of the meatball. Mr. Meatball, obviously an intriguing week for you. A lot of upside and then downside and then upside and then downside in the land of vol this week. The vol products eroding and then getting it back and then eroding again. So a lot to parse. What's been lighting up your tape down there in the southern volatility mecca this week, sir?
Yeah, I mean, I think Amazon was really fascinating. Going into Thursday morning, so Wednesday night, Amazon is trading, 30, 50, something like that, and the straddles of $180. By the end of the day, Thursday, it was trading near 2,800, and the straddle had exploded to about $220, and it still is more than almost double that straddle price, up $400. As we're talking, all these names, PayPal, Facebook, Apple, Google, all these mega caps are just blowing the doors off of the expected move on, as Brian said, the expected move. And we're getting some like really wild moves in the VIX. We were down 104, but it's interesting. Yesterday was a little weird, right? We're down 114 points. VIX really doesn't even catch any frothiness till kind of the end of the day, and really has been unable to get off the map all day. Even when we were down 20, it was barely moving. They seem to be positioning themselves for, maybe VIX to take a breath here. So it's just been it's been really interesting watching this market move. Brian hit it again. The bond market is moving everywhere. Traders are jumping in and out of earnings plays. There's earnings plays galore floating around out there. It's just really kind of fascinating to watch.
Yeah, I'm looking at our chat. Looks like Luigi normally trades around Amazon earnings. He says he usually puts it about 400 handles out of the money, and he didn't do it this time. I feel for you, Mr. Luigi. This is, of course, that's the one you don't do it, right? Where, of course, it blows the doors off. Amazon up 403 right now, listeners, or about 14.5%. Since we're talking about earnings and straddles and all this craziness, let's just get there first before we get back into VIX land, because so much is popping off in that spot. In fact, Brian, you kind of precipitated some of this. You had us do a poll question a couple of weeks ago as a result of OPR, because you were doing a lot of long straddles on OPR last year, and you were kind of wondering whether you'd be doing a lot of long straddles or if people were even going to be interested in long straddles in 2022. So we put that question out to the audience. I believe this was last week. And we said, hey, inspired by Mr. Overby there, we said long straddles are popular on Options Playbook Radio last year. So our question last week was, will long straddles remain popular and profitable into 2022? And our audience, Mr. Brian, pretty firmly in the yes camp, 47% saying yes, 35% saying no, and about 18% saying they prefer the short straddles. They're intriguingly enough, looks like Bloomberg listened to your poll, Brian, because they put out a piece yesterday talking about this radical new vol trading strategy called the straddle. Stop me if you've ever heard it. And they talk about Goldman. Apparently Goldman is out there talking up long straddles. We're in crazy town when Goldman's out there talking up long straddles. But their headline of their article is Goldman Sachs touts volatility trade, netting 15% on wild earnings days. And they go through, of course, all the standard disclaimatory information, what a straddle is, all that kind of stuff like that. But they include this line, the higher than normal moves may have driven up the profitability of buying straddles around earnings, says this Goldman strategist. So, Brian, what do you say? You obviously have precipitated a lot more discussion around long straddles these days. So I blame you for all this.
That is not the most common strategy. Obviously, we do a lot more butterflies and other things like that. But the long straddles, almost every one that we talked about last year, I think on paper, because they are paper trades, were all profitable. And the first one that we looked at this year was just based off, was Micron Technology. And that's what prompted that question. And Micron definitely, and it was more so based off of the chart. I'm not a big fan of long straddles around earnings, even though they obviously, according to Goldman and everything that we've seen, would have been a good trade this week overall. If you would have did long straddles in every one of the FAANG stocks, I think you would have made money overall. But with that said, a lot of people just take a hiatus away from the concept of buying premium overall. And like right now, looking at where the VIX is at, I'm kind of surprised to see that the VIX is, as Mark mentioned, it just really didn't move much. I'd expect to see the VIX closer towards the 30 level, considering what's going on in the marketplace. So people aren't willing to pay up for SPX put premium. Is that basically what we're saying here? Because they feel comfortable about the marketplace overall. So yeah, when we see vols trading at lower levels relative, all of the FAANG stocks were the expected moves are right around 5 to, let's say, 8%, which is their normal range. And the marketplace has just been more volatile than less volatile since the beginning of the year. So long straddles are in vogue, if you will, I guess, as we start 2022.
Yeah, I guess that says something about where we are in the markets. By the way, I love these researchers. They, look, they were good this past couple of weeks. So go out there and load up on straddles, ignoring the fact that if you did this for the better part of the last 2 years since the pandemic, you got your clock cleaned. But that's a conversation for another day. Mr. Meatball, what do you think about Goldman out there talking up the pure joys of getting long some earnings straddles?
I mean, it works until it doesn't.
Right.
And, things will go thud at some point for earnings premium. I think some of these super mega caps were definitely more interesting than some of the smaller names. I don't recall, some of the Exxon made a move, but that's been on oil, not on their earnings. Although, Ford getting smoked today. So it's been both ways. The other thing that's been kind of crazy is the end of day algo moves that we've seen out of the market since really last Friday. The last half hour of the day has just seen absolutely astounding moves in the direction of the market into the close. Friday, we rallied, $20, $30 in the final 20 minutes. Did something similar on Monday. Did another little end of day ramp on Tuesday. Tried to ramp on Wednesday, and then it was really funny. Wednesday, the last minute of the day, the SPX dropped about $10 in what seemed like a snap. And I was wondering whether Facebook earnings maybe leaked out a little early, because that was really odd. And then yesterday again, into the close, they dumped the market another 30 points. So that the fireworks have really been in the last 20, 30 minutes of the day.
Since we're hitting on earnings right now, let's just roll through the rest of these really quickly. Of course, you guys can check out all this data for yourselves. I was looking at the article and what the Goldman analysts are talking about, and they were doing a poor man's version of what Matt and his team do for us all the time that we give you guys for free over there at theoptionsinsider.com. The earnings move results, earnings season, and now, of course, the earnings trades report. So all that stuff freshly updated over there at the website on a regular basis. By the way, I talked to Matt. He was none too pleased that they ran an article about earnings straddles and didn't talk to him. He's kind of like the go-to guy for all things earnings straddles. I got a feeling that Bloomberg reporter is going to be getting a call. But aside from that, let's look really quickly how the earnings season is shaping up. You don't need me to tell you that Facebook blew the doors off Spotify as well. Snap blowing the doors off as well. What a crazy one on Snap. But of course, Eli Lilly and Mark were, of course, yesterday as well before the bell. We had Qualcomm before this week, so a very heavy week. You can check out all the earnings move results, and earnings season reports for yourself. Speaking of the earnings season, we're looking at about an 85% right now. So in spite of what Goldman is telling you, load up on every straddle out there. You got to be very judicious. Only a handful of names are really blowing the doors off. This week, we've had so far the best results that we're seeing, 113%. So outperforming the week before 70%. So if you bought a bunch of straddles last week, you got your butt handed to you. The week before that, week 1, 101%. So you kind of just barely broke even. And again, if you've been listening to these shows for any length of time, you know there are a lot of newbies out there. So check out the archives. But since the start of the pandemic, earnings vol has been a difficult and dangerous thing to dive into. So read that Goldman article. Don't just wade into long straddles willy-nilly. Even for pros, it's a very difficult strategy to have and remain profitable over the long term. You can't just load up an at-the-money vol ahead of earnings and think, okay, all's hunky-dory out there. In fact, looking at these numbers right now, we're averaging at about an 85% right now for this season. So in spite of the fact this week being good and week 1 being break even pretty much, we're still down for the season. So will that remain the case? Again, some big names still the pop, and we have a lot of news to come out, but intriguing stuff. Just check out some of this data. That's all I say to you. Check out some of this data before you go diving into straddles. That way lies ruin for many a seasoned trader. Let's get back out to the world of vol. Coming into the start of the show, we had VIX futures curve giving up all that backwardation and then some. As we kicked off the show, the Feb future was down about 3 points from where it was this time last week. Obviously down more now as we're about halfway through the show almost. March down about 2.5 points. Mr. Meatball, anything catching your eye out there in the land of VIX futures as the curve has given up all that backward juice and then some, sir?
Yeah, it's been a pretty dramatic shift for the VIX curve. Really dramatic. Almost as dramatic as VIX itself. We just experienced the third time in the last 3 months where the VIX dropped 10 points in the matter of just 5 days. And the VIX curve went from nearly 30 right back down to 23. The curve is right on top of the index. So Fed futures are sitting right on the cash, which makes me think that they believe there is going to be more downside on the index itself. Otherwise, you would be seeing them have a little bit more premium to them. So VIX futures are positioned for vol to potentially drop further.
Let's see what's going on out here. From an overall volume perspective, let's head on into the options, spikes, options land first. We're still seeing that pretty much four-way, that Feb 22-26 put spread versus the 30-40 call spread. Still dominating the OI out there in spikes land. We'll let you know if they take that off soon or if they adjust it or roll or bring others on top of that. Let's keep on rolling on out there into the land of VIX options, and not a heck of a lot lighting up the tape in VIX options as well. You know by now, if you've been listening to the show for a little while, days where the markets are slightly up and VIX is coming off, usually not the days where we see a ton of paper lighting up VIX. Usually it's the opposite. The market's selling off hard. VIX is popping, and that's where we see, like, look at last week. We hit almost 2 million contracts last Monday, right? When NASDAQ was off 4.25%, S&P off 2.5%, and everything was wild and crazy. Those are the days you see VIX popping from a volume and from a level perspective, not so much today. Only about 250,000 contracts on the tape as of a few minutes ago. The ADV, though, still looking firm. It's up to 643,000 contracts, up 54,000 from this time last week. So getting close again to that 730 level or so where it kind of topped out last time. We'll see if we can get up there. Probably need another week like last week to really take that next leg up. I don't know if anyone needs those shocks to the system right now, but that's probably what it will take to keep us going. Nonetheless, that ADV up about a couple 100,000 contracts over the course of the past couple of weeks. So nothing to sneeze at out there. We were threatening 400K in the wrong direction not too long ago, listeners. So a big change there. Let's see if there's big changes out there in the land of VIX options. And actually there are, listeners. We like to look at what's going on with the top 10 positions out there in VIX options land, listeners. And for a while there, it was kind of 50-50. Then I started edging towards a little bit towards the puts. Now it is pretty much all puts all the time. There is one call to be found in the top 10 of VIX right now, listeners. So let that sink in for a little bit. VIX traditionally in a normal environment should be a very call heavy, dare I say it, call dominated product. And there is one call we found in the top 10 right now. Cost you 129,000 contracts to break into the top 10 in VIX land right now. I get you to the June 16 puts. Number 9, 132,000 of the June 19 puts. Number 8, $1.32 of the Feb 22 puts. Number 7, 146,000 of the June 18 puts. Number 6, our first and only call, the lone interloper there in the top 10. It is 147,000 of the Feb 50s. That's what I love about VIX. It can't be a Feb 25s or the Feb 20s or 30s even. No, it's got to be the Feb 50s. Number 5, $1.51 of the Feb 17 puts. And then we got just puts for days, the rest of it, listeners. Number 4, 160,000 of the Feb 21 puts. Number 3, 169,000 of the Feb 19 puts. Numero due here, 201,000 of the Feb 18 puts. And number 1 with a somewhat small bullet, 220,000 of the Feb 20 puts. Today, like I said, a little bit over 250,000 contracts on the tape. The big dog out there today, about 23,000 of the Feb 20 puts. Number 2, 11,000, so falling off a cliff there, of the March 20 puts. Number 3, also 11,000 of the Feb 21 puts. Number 4, about 10K of the Feb 30s. And rounding out the top 5 today, 8,500 of the Feb 35s. Yesterday, a little bit more paper on the tape, though, not even getting to the ADV. 510 on the tape yesterday, the most active contract on Thursday, almost 40,000 of the Feb 24 puts, followed by about 34,000 of the March 24 puts, so maybe a bit of a roll there. Number 3, 27,000 of the March 27 calls. Number 4, 22,000 of the May 28s. Interesting. And rounding out the top 5 yesterday, 19,000 of the March 50. Some folks just have that 50 strike. They can't get rid of it. Stuck in their brains. Wednesday, 584,000 contracts on the tape. The big dog on Wednesday, 63,000 of the Feb 20 puts, followed by 49,000 for number 2 of the Feb 18 puts. Number 3, 39K of the Feb 22 puts. Number 4, 34,000 of the Feb 19 puts. And rounding out the top 5, got to get all the way down to number 5 to find a call, listeners. It was 33,000 of the Feb 30. So at least it's a, dare I say it, slightly more relevant strike than the Feb 50s. Tuesday was the big dog for the week, of 711,000 contracts on the tape. The big dog on Tuesday as well, Feb 21 puts, 60,000 of those, followed by 38,000 of the Feb 22 puts. Number 3, 37,000 of the Feb 20 puts. Number 4, finally we break the monotony, 27,000 of the March 29 calls. And rounding out the top 5 on Tuesday, 24K of the Feb 25 puts. Monday, that was the big dog last week, as you'll recall, listeners. Nearly 2 million contracts on the tape. This week, not so much, 453,000 contracts on the tape for Monday. The big dog, over 10% of that paper, was the Feb 20 puts. Yet again, a very popular strike, 47,000 of those on Monday, followed by about 28,000 for number 2 of the Feb 25 puts. Number 3, 27,000 of the Feb 21 puts. Number 4, 23K, going out to April for the first time here this week. April 20 puts, 23,000 of those. And rounding out the top 5 here, back to Feb, 23,000 of the Feb 24 puts. Mr. Meatball, pretty much a put palooza out here all week in VIX land, unless you want to count the Feb 50s. But outside of that, pretty much all puts all the time. What caught your eye out here in VIX options this week, sir?
Yeah, exactly that. Lots of people positioning to fade. Even yesterday when we were dumping, there was not people racing to buy calls and call spreads. We've just seen the entire market position options to fade VIX here, looking for VIX to drop below 20.
That does seem to be the case, though. I have to imagine you and a few of the pick crazies probably getting in on some of those Feb 50s, right?
No, I was not buying the Fed 50s, but you know what I am thinking about buying, and I know this isn't VIX, but I gotta ask your guys' opinion. I don't know if you XLF, the March 4 41 calls over the last 2 days, somebody's bought 200,000 of these. That would be, which is to me kind of interesting, and want to know if we had that. Hopefully, I think that'll be on your unusual activity show, the odd lot show that you do with Andrew. But want to know if you'd spotted that and if you had any thoughts, Mark and Brian.
Well, yeah, not to spoil our thunder for oddities, but yeah, it probably will come up there. XLF, we don't talk about it a lot usually in the unusual activity realm for obvious reasons. It's a big financial select spider. But yeah, there are some crazy prints going up out there. These March 41s expiring on the 4th, not even the regular monthlies. Doing big paper. Even again today, we're seeing, what is that, 53,000, a print of 53,000 for 41 cents earlier this morning. So someone's got an axe to grind, and it isn't that far away. It's up almost 2 points today, or I should say 2% today, up about 70 cents, hovering right around the 40 strike in XLF, listeners. So the 41 calls by exactly a month from now is not exactly an insane level. Brian, first off, if you have any thoughts on XLF or perhaps the sudden preponderance of March 41s going up this week, have at it. And then B, I'm sure a lot of our audience, we love when we have the broker folks on because we get a little bit of a sneak peek into what's going on in their community there. What are your folks in Ally? What have they been up to in the land of VIX over the last couple of weeks, sir?
If I look at the XLF, and it kind of what we talked about at the top of the show is if people are buying that large of a lot in the XLF, they got to be thinking that interest rates are going up, and they have been recently. And that's one of the things that I highlighted today that's getting kind of lost in the noise is where the 10-year yield is at right now. And so the XLF relative what's going on in the interest rates, you see that big of a trade, that means that they're thinking that 10-year is probably going towards that 2% level, which it gradually has done overall. As far as the VIX is concerned, I just in general am surprised to see so much put volume relative to the call on the large or on the open interest and large lots overall. In that it doesn't seem like a lot of this volatility that we've seen from earnings is scaring a lot of people out of the marketplace. So the fact that it's driving the market down towards the 20% level based off of the volume and the stuff that you're seeing has kind of been a surprise to me overall and our clients there at Ally Invest. But so two separate things. It did see that big trade that Mark was talking about. And I do think that is a relative trade to interest rates just as much as it is in the financial space, which also can lead into maybe some big trades in the energy space too.
Yeah, energy's been a crazy one. Our chat was on fire earlier with talk of nat gas and putting on WTI par call positions. Obviously, it hit the 90 handle for the first time in years out there, listeners, this week. So crazy stuff afoot out there in energy. Mr. Meatball, I'm curious. This one's on your radar over there. What is it? The big money flow. So have you guys, have you piled on to this one as well, sir?
Into XLF or XL or the XLE?
XLF.
Yeah, it's one I'm really thinking about. I'd love to see, and you're seeing Bank of America jump today. Interestingly, the biggest section of XLF, the biggest piece of XLF is Berkshire Hathaway. A lot of people don't know that. That is the biggest component. So it is definitely one I'm pondering. 41 cents for those calls is not a ridiculous price.
No, I was thinking the same thing. That level is not exactly, even with all that paper going up, 77,000 have gone up today. I don't hate it. That's all I'm going to say. I'm not saying I'm running out to do them, but I don't hate it. I'll have to ponder it between now and oddities. Maybe I'll see if I can goad the Rock Lobster into buying some with me if I do some. All right, let's go on out now to the land of the products you folks love to fade. And last week we had some backward juice in the VIX futures. That's usually not a good setup for your erosion in your UVXY and your VXX. This week, all that backward juice got wrung out of the front portion of the VIX futures curve, so it's back to downward hoe for these products. When we kicked off the show, VXX was at about 21.5. That puts it down about 2.3 points. It's well below the 21 handle now, at about 20 3/4 or so. So it's down another 3/4 of a point or so from there. So pretty much 3 points from this time last week. So a lot of that juice, it got delayed, but it got out eventually. Listen, unless we have another sell-off, then of course, right back in. That's the market we're in right now. 234,000 contracts on the tape. So not quite a tail wagging the dog day, but VXX keeping a pace with VIX options today. No slouch. The ADV also up pretty well this week as well. 356,000 contracts is the ADV. Now it's up 30,000 from this time last week. So that's nothing to sneeze at, closing in on 400K for the ADV out there in VXX. Top 10 out there, same deal in terms of 90-10 and also one call only to be found. So VXX looking a lot like VIX right now, at least from a top 10 perspective. One call to be found. I'll let you guess what it is. We'll get there in a second. Number 10 in the top 10 VXX land, 16,100 of the March 17 puts. Number 8, 17,300 of the March 19 puts. Obviously, we could be there 19 handle by the end of the show, the way this stuff's keeping up here. Number 8, our first and only call in the top 10, 18,000 of the Feb 60s. Once again, it's got to be something outlandish. It can't be 20s, right? What fun would that be? Number 7, 19,000 of the Feb expiring today, 18 puts. Then back to March for number 6, 21,000 of the March 18 puts. Number 5, also 21,000 of the Feb 20 puts. And the rest is pretty much all Feb all the time. Number 4, 22K Feb 16 puts. Number 3, 25K of the Feb 18 puts. Number 4, 47,000 of the Feb 19 puts. And number 1, jumping up a bit, 56,000 of the Feb 17 puts. So it was there for a while. It was kind of that overriding paper to the upside. It was the 60s and the 70s that was kind of dominating the VXX and UVXY positioning. We'll see about UVXY in a second, but right now, all puts all the time in the top spot here in good old VXX. That's quite the swing because 2 weeks ago it was pretty much 70-30 puts over calls, so now 90-10 puts over calls out there. Today, in terms of paper, today about 16,000 of the Feb 21 puts expiring today, leading the dance, followed by about 10,500 also of the expiring today Feb 22 calls. So a bit of a change up there. Number 3, the next week expiring on the 11th, 22 calls going up 10,000 times. Number 4, 6,700 of the 21 half puts going out today. And rounding out the top 5 in the VXX today, also expiring today, the 23 calls with about 6,200 of those. Mr. Meatball, a good week to be back in VXX, getting some of that juice out again. What caught your eye out there this week, sir?
Yeah, it just got smoked. It got a little bit of a reprieve yesterday, but it's giving that away. And I would venture to say I think they may torch it further into the close. UVXY as well, which I know we're going to talk about in a second. Both of those look like they are going to have a bad day. And implied volatility on those options is getting hammered as well. So just, rough day for VXX.
Yeah, I wouldn't be surprised to see that 19 handle pop up on the radar by the end of the day out there in VXX. Let's get on out to the dog that likes to erode the most aggressively out there, which is, of course, UVXY. UVXY was still north of the 15 handle when we kicked off the show, about 15.1. That puts it down about 2.7 points from this time last week. Now well shy of that, right around 14.5 now. So north of 3 points to the dark side for UVXY this week. That ADV also ticking up to 232,000 contracts. It's up 13,000 from this time last week. Today, decent paper, even though not quite hitting that ADV. Let's pull it up right now to see if we get the exact up-to-the-minute number. It's ticked up a bit. It was 137,000 when we kicked off the show. Now up to 177,000. So that's some decent paper out there in UVXY. Speaking of decent paper, lest I forget, I have often maligned UVXY on this show. And the lone defender of UVXY for a long time was our buddy out there, Mr. Famous Dave. He wanted us to know before showtime. He was tweeting into us. He said, contrary to past notions, UVXY is alive and well, currently ranked 5th out of all ETFs average daily volume over the last 3 months, averaging 65 million shares per day. Then he ended up correcting himself. He says, actually, it was number 4. So there we go. I apologize to you, Mr. Famous Dave Lincoln out there, for for having the temerity to malign UVXY. I've been back in it. I've been trading it around quite a bit over the last few months. So it's even sucked me back in, the most diehard of skeptics, after the whole SVXY, UVXY. I swore off that whole product family because it was just a disaster. But UVXY, it's kind of your best of bad options out there right now. So you got to kind of take what the market gives you. And it does. If you want that erosion, it's going to kick into high gear faster than VXX. So that's kind of what you're coming to the dance for. You got to go to the one that delivers it to you, even if it had all the neutering problems and everything else. So allow me to officially apologize to the UVXY gods for questioning who would trade such a thing. In terms of what is trading out there right now, what are the top 5 positions in UVXY? Number 5, the March 50s, about 10,000 of those. Number 4, 13,000 of the June 20 puts, kind of all over the place here in UVXY. Number 3, 14,000 of the Feb expiring next week, 14 puts. Number 2, about 16,000 of the Feb expiring today, 15 puts. Those are going to look good. And number 1, almost 16,000 as well of the March 70s. That gets back to what I was saying before about that weird upside paper, usually dominating products like UVXY. That's still the case in UVXY, not so much in VXX. It is now 50-50 puts to calls in the top 10 for UVXY. That's down from 70-30 calls over puts a couple of weeks ago. So a little bit of evolution out there. And in terms of paper today, the big trade, 15 puts going up 14,400 times. And then the 15 half calls, again, all these expiring today, 13,600, 15 calls, 7,000 of those, 14 half puts, 6,300, and rounding out the top 5. And UVXY today, 4,700 of the Feb 16 calls. Mr. Meatball, I know you love yourself a little bit of UVXY. First, what do you have to say to our friend, Mr. Dave, kind of calling us to task, mostly me, but you're in there too, for slamming UVXY in the past, saying it's actually putting up some numbers? And then B, amongst those numbers, what caught your eye this week, sir?
I never gave up hope on UVXY. I was very excited when it reverse split. It's a great trading product, and it's great for day trading. It's one that I like to follow to kind of really see what the next leg in the market might do. If I don't want to sit there and just stare at VIX futures all day, I can throw UVXY up on my stock monitor, and when that thing starts to move, the market's going to move as well. I'm all for it. UVXY, we got it's a Friday, so we know what's happening with the options. There's a massive amount of at the money puts and calls trading. So you've got the 14.5s going up 8,400 times. You got the 15s going up 10,000 on the calls, 17,000 on the puts, and you've got 16,000 of the 15.5 calls trading. So really active day in those in the UVXY expiring today.
All right, let's see if it's an active day for your questions. Let's fire up the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys know where to find us, all the major platforms at Options, questions at theoptionsinsider.com. If you got live questions, pop them in. They'll bump to the top of the list. We also ask you guys questions out there like we're doing again this week. We have a twofer this week. Kind of fun. First off, talking about skew, we asked you, we've seen pretty high levels of skew in the major indices in recent months. Not so much this week. As I should have mentioned at the top of the show, this year, everyone's favorite index and barometer, the skew index, actually unched from this time last week. So very rare to see that out there. There's not a lot of skew evolution out there, but we have seen higher levels of skew going back about a month or so out there in most of the major indices. And we probably will see that again. So we thought we'd ask you, what do you guys prefer to do in long skew environments? Gave you pretty much 4 different choices. Long puts or put spreads or collars, not traditionally conducive to those. Or flipping that script, short puts or put spreads, or the old bullish risk reversal. So you're selling the put and buying the call to take advantage of that skew. Or put flies or ratios or other. Hit us up with all your crazy skew trades out there. And so far as I kind of expected, short puts / bullish risk reversals and spreads, leading the dance with about 56.5% of the vote, followed by almost 22% for long put spreads or puts or collars. So some folks saying, high skew be damned, I'm still buying those puts and selling those calls. So that's kind of surprising to me. Number 3 is put flies or ratios. I thought that would get a little bit more love given, taking advantage of that skew. And the other, about 9%. And a bunch of people wrote with others. A bunch of people sent in some ideas, but a lot of you didn't. So if you're going to vote for other, the rules are you have to give us what your other. That's the rule. So you guys are not playing by the rules. I wave my finger at you. That's going to expire in about a couple of hours out there. So if you haven't played along, if you're listening after the fact, maybe you'll have time, but you probably got to get in there now. If you haven't voted, get in there now, listeners. And of course, we have another one this week. We were talking about single names earlier in the show. Some of these single names on these big pandemic high flyers have come under some heat of late, to put it mildly. So we said, a lot of people are looking and starting to eye some attractive levels, some of these high flying names. Which ones are you adding to your pandemic/bargain hunting portfolio? Gave you 3 choices with the infamous other. Gave you Peloton, Robinhood, and AMC, and then the other. And the other, a lot of people wrote in for Rocket, so we probably should have added Rocket in there. A lot of love for Rocket out there. DraftKings got some, SpaceX, a few of the others. Most of your meme names got a couple of votes, but it seemed like Rocket got everyone who wrote in added Rocket. So probably I would have to pencil in Rocket somewhere in there as well. The winner right now with about 56 and also 56.5%. Very strange. For both polls. Robinhood is taking the lead by far. They got to single digits last week, listeners, before bouncing off that level pretty aggressive. I have to go see what they are now. We'll check in on Robinhood a little bit later today on options oddities. Number 2 is AMC with 26.1%. Number 3, Peloton, 13%. No love for Peloton. And then only 4.3% of you saying other, and most of those saying Rocket. So a lot to unpack. Mr. Brian, what are your thoughts there on either of these polls? Folks are mostly selling puts into high skew, which is good, even though roughly 20% of them still saying they want to buy puts in that environment. And also, any thoughts on our single name poll? Any surprises for you there, sir?
No, no surprises at all. The hood trade, definitely odd to see that it's been, cut in half since its IPO. So obviously doing a little bottom fishing there, trying to catch some falling knives overall. Stock is doing okay today in general. So that is not a surprise to me. And the best way to whenever you see that skew overall, I want to be selling a lot of those puts. And in a lot of the underlying names, including the indexes, whenever I see that type of skew. So that does not surprise me either. I think I would have joined the crowd in those answers that they gave.
Mr. Meatball, any thoughts for you on either our single names, Hood dominating the pack? Hood at $15 right now, listeners. So bouncing pretty much 50% over the course of the past week or so out there. So quite the rebound from some pretty bad earnings out there in Robinhood land. Mr. Meatball, any surprises for Hood leading the dance, or also the folks surprising, almost 25% of them still willing to buy puts in a high skew environment, sir?
Yeah, I mean, one, there's a reason why skew is high, because puts are working a little bit. And Hood, I would probably say Peloton personally, just because I think, I've got one sitting next to me that has been used once in the last 6 months. And I want to I'm thinking about taking off the screen and turning it into like a longhorn cow and making like lawn art out of it, just so that it has some utility to me.
Still paying that sweet monthly fee though, right?
Oh yeah. How can I lose?
Sweet monthly fee for lawn art. That's always good. That's always good out there. All right. Speaking of which, you guys talking about your XLF trade before we got our chat going about TLT and other options out there. In particular, they're debating TLT versus IEF, which is the iShares 7 to 10 year treasury bond ETF, debating which one they like better and which one is more liquid. So, Brian, we'll start with you maybe. Do you have a preference of either TLT or IEF in terms of trading or liquidity out there, sir?
Well, I struggle a little bit on both of them, honestly. But TLT is the one that I've always followed, the one that I've always looked at. Haven't spent a lot of times in the IEF. So I guess I'm going to lean towards the TLT. I just think it gets quoted more often. It gets mentioned more. That usually brings in a little bit more volume overall, a little bit tighter markets.
Yeah, IEF, 16,000 is the ADV out there. I forgot who asked that. And then TLT, a little bit more, 120,000. So, yeah, I'm definitely lean TLT. Mr. Meatball, is that your choice as well? Is TLT your go-to for bond vol and keeping an eye on things out there?
IEF is going to kind of follow along with the benchmark 10-year note. So when I'm looking at price, I pay attention to IEF. But yeah, the volatility in TLT, the movement in TLT is a lot greater. There were periods of time where TLT vol was higher than SPY vol for in the last few months. So yeah, and TLT, because it's the back end of the curve, it is more volatile and it's the better trading product.
That it is a little bit of a sidetrack, but hey, we get into bond vol here every now and then on the show as well. If you want more rates, we did a deep dive into rates yesterday on TWIFO, so check that out, listeners. We get into the vol, the skew, all that good stuff. Got specifically into the 10-year yesterday, so check out that episode if you've missed it. As we keep on rolling, it is time for the most difficult, indeed the most dangerous part of the show, listeners. Brian's been sweating all show just for this because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, let's see how much vol is left here at the end of the show as it keeps eroding. And we got spikes at the end of the show, listeners, at a 24.10. That's actually looking pretty good for the Flowmaster. And let's see, VIX hanging out. How low do we go in good old VIX? VIX has got a 23 handle now, listeners. So, yeah, right around 23, a little bit less than 23 and a quarter. So we're seeing, Flowmaster looking the best from a spikes perspective. He's about 0.4 away, obviously not within our margin of victory. Of course, all of you, I thought, last week thought I was crazy going at a 27 handle, 27.65. Was looking pretty good out there until it wasn't, as is the case with all things vol out there. You know, if we just ran it, let's say midday on Monday, if we just kind of paused the contest right there, bam, I'm a bullseye, and you know the winner is decided. But alas, that is not the way our contest works. Got close, got within spitting distance this week, but not enough, listeners. So we'll have to give it to the Flowmaster, even though he's not within the bullseye there, but we'll have to probably give that one. That'll be a guest victory out there. So that means, Mr. Bryant, you have the choice as you're filling in the guest seat this week. Would you like to go first? By the way, I was at 27.65, and the Meatball was feeling the teens ever so slightly, 1999. A good year, but not so much there from a vol perspective. So, Mr. Bryant, that allows you get pride of place. Do you want to go first, or would you rather go last and see how everybody else shapes up?
I'm going to go last. I'm going to be a little contrarian overall, I feel. So I'm happy to go last this time.
You're learning how this game is played. Well played, sir. All right, let's get on out there then. So the next closest was me, so I guess I shall bravely venture for it. By the way, look at some of our audience really quickly to see if anybody was close. Looks like a lot of people, Munster had a 25 handle. That's not going to do it. 27? So, man, we had some high. 25 3/4 for unlimited. Looks like the closest was a 23.10. Actually, 23.10 from JVC. That's actually looking pretty good right now from a VIX perspective. You might be within our 10th of a point margin of victory. So stay tuned for if we'll run the numbers exactly, but you might be getting an email from our producers at JVC. So good guess there. I like that. All right, let's get on out to this week. Again, we're seeing that vol coming in the front portion of the futures curve, no longer backward. Will we see this vol continue to get crushed, or will we see another day like last week? We come in strong, vol kind of comes off a bit, then we get some sort of shock to the system towards the latter portion of the week, and vol gets elevated again towards the end of the week, and it starts coming off again on Friday. I got to imagine we're going to see more of this kind of ping-ponging of vol for the near future. So I'm not feeling a ton. I'm certainly not feeling a teens handle the way the Meatball was this week. So I'm going to say actually not that far from where we are right now. I'm going to kind of split the difference between spikes and VIX right now. I'm going to say 23.65 out there. Could we get a vol annihilation? Sure, that could happen. But I'm feeling that there will be another shock that will get us at least back up into the low 20s again next week. All right, Mr. Meatball, you get to go next, sir. What are you feeling for this time next week?
1999. I
had a feeling you would just. I don't know why I even asked you. I was gonna type that in myself for you, but I thought no, I wouldn't do that to you. But yes, 1999. There he goes. Meatball. If it didn't work last week, let's just try again. Why not? All right, Brian. There you go. There's your market right now. 23.65 on the upside. That's me. 19.99 on the dark side for the greasiest of meatballs. So you could go inside that. You could carve your own path, sir. Blaze your own trail. What are you feeling? And actually, I'm going to add an addendum. I didn't say this to you earlier. You haven't been on with us yet this year, so I'm also going to give you a chance, if you would like, to join our VIX closing end-of-year prognostication. So I'm going to get a twofer of predictions from you, sir, if you can.
Oh, wow. Well, I guess I like I like the fact that Mark's just basically like playing the lottery, the same number over and over
same
again.
Scratch-offs every week. Give me the 6 and the 4 and the 2.
I do like that. I'm going to be contrarian because I don't really understand why there is so much put volume overall. I really think that the VIX should be a little bit higher in these market conditions. I'm a little bit more nervous about the market than the market seems to be. So I'm gonna go up towards the higher end of the moving averages. We're gonna say 24.12.
24.
That's where I'm going. I'm going up from here next week. Now, I do think that there'll be a little bit of a spike up, but Fridays, the markets kind of settle in, and I'm going to go 24.12.
And what are you feeling for this time at the end of the year?
At the end of the year, I'm going to go. Oh, God, that's putting me on the spot. All right, we'll go 1875. I'm feeling 18. I was going to say 19. I'm going to go 1875 at the end of the year.
All right, end of the year, you get the benefit of one less month. You get a whole month of hindsight behind you. The rest of us all had to do it at the beginning of the year, sir. So you should be doubly precise. January is the craziest month of the last 2 years, so you got that out of the way now. So you're good.
Right. I'll predict that it will be colder at the end of the year than it is right now. That's another, because basically that's what you're shooting at, right?
There you go. I like it. Maybe we'll add some snow futures in there as well. It's like Luigi coming in at a 20. Was he at a 23? Oh, 24.75. I thought you were scumming me again by a tenth of a point, Luigi. 20. That gives me a little bit more breathing room. Thank you, Luigi. Widely known far and wide to like to scum my vol predictions. Get your predictions in. You could be like JVC. Looks like we may have a winner chicken dinner. You got to be within a tenth of a point, listeners. That's our margin of victory. We demand it of ourselves. We will extend it to you. If you want to win the fabulous prizes, you got to be within that. So if you haven't been playing, get in there. It's pretty fun. And hey, cost you nothing. And maybe you win some fabulous prizes. Just ask Luigi and a bunch of others. Options Queen, they've all won. And I think they're sporting some of their fabulous prizes and other fun things right now. That music, of course. Let's see where we are right now. We got some folks in the 16 handle. You got a VVIX prediction too. While people going out on a limb, I like that VVIX, and all over the place. 19, 24. That makes a vol market, right, listeners? So get in there, put your predictions in, and we'll see what you guys got for us. Unfortunately, that's all we got for you this week, listeners. But before we go, let's go back around the horn. Let's start with Mr. Brian. Of course, Brian, they can check you out every week on OPR if you want to give some plugs for what's coming up. And by the way, a little birdie did tell me we are rapidly approaching the OPR 400th episode extravaganza. Did you know that, sir?
Yes, I did. Little birdie did mention that to me this week, too.
So we may have to plan something fun for maybe, what do you think, maybe like a mega live huddle extravaganza? What do you think? Just taking on all comers?
The huddles are my favorite, so it's not hard to twist my arm.
All right, maybe there we go. That's a tentative agreement there, listeners. We're gonna get. I know live is hard for you, Brian. We're gonna get them on live. I do believe that's coming up in 2 weeks, so pencil that in, listeners, for Wednesday from 2 weeks from now. Brian and I going live. We'll take on all comers. We'll go crazy for like an hour. You guys love that OPR over there live. Can you believe it's already episode 400, Brian? Isn't that crazy?
Yeah, that is the views, the downloads, and how popular it's been. So obviously, love to spend an hour with the listeners and try to give them a little bit of the love back that they showed me and Options Playbook Radio last year. So love to do it.
They do love that. So of course, Stay tuned over there at OPR coming up soon. And in the meantime, in between episodes of OPR, where can they find you, Brian?
Well, the easiest place to learn about all the educational events that we do at Ally Invest is just follow me on Twitter. My handle is very simple, at my name, at Brian Overby. And I usually tweet about all the podcasts, let you know when they're coming up, and any of the stock plays of the day we do on the YouTube channel. So that's by far the best place to get a hold of me.
There you go. Give him a follow on the old Twitter machine at Brian Overby, Overby, all one word. He tweets out lots of fun stuff throughout the week, not just the show, even though he does tweet out the show as well. Mr. Meatball, if folks want to hit you up to talk about XLF, TLT, the big money flow, all that cool stuff, Tradosaurus, where should they go? What should they do?
Yeah, go to optionpit.com. I write a VIX blog every day. It's loaded with good content, lots of stuff to read. It'll help you become a better trader. Best written content on options available on the web. Go to optionpit.com and read that VIX Edge blog.
There you go. You know where to go to learn more about all things spikes. MyAxOptions.com/spikes. They have, of course, historical data there, current trade data releases, so you can see what's going on with the product. A lot of things are developing over there. And, of course, the link to a cool show called Volatility Views. What more could you possibly ask for from a vol-oriented destination? MyAxOptions.com/spikes. And, of course, that's going to do it for our broadcast week here, at least for the traditional network. All of you Secret Club folks, get a beverage, relax, hit the restroom. We'll be back in a little bit less than an hour to break down the mad week worth of crazy activity, plus all the money we're throwing into these trades just for your enjoyment over there on Options Oddities. That's coming up in about exactly an hour from now. And then we'll see you back here next week. More great content. I got little birdie told me that maybe the Flowmaster might be joining us in Pro Q&A next week. So a great one this week with Jem Carson. Vol questions for Henry and the data. He's the guy who crunches all the numbers. That'll be next week on the Pro Q&A. And then, of course, Options Oddities again next Friday, as well as another episode of Volatility Views. We'll see you then.
Volatility Views is brought to you by MyAx, one of the fastest options platforms in the world. MyAx is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.myaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.